Welcome everyone to HueFin News. Today is February 25th, 2019, the home of the 2-minute price prediction, as well as giving you all the news according to the price charts. We're going to talk about 3 Chinese stocks that you don't need to worry about and that you may need to buy. This was an article that was posted last Friday, February 22nd, 2019 by Matt McCall. We're going to go ahead and look at these 3 stocks that he anticipates will continue to move higher in the long term, which will be JD.com, Alibaba, and Ctrip. Those 3 Chinese companies, he feels that they are capable of continuing to move higher to the upside. So we will look at this article to make sure that it is transitioning over onto the price charts, meaning that if he's feeling positive about these 3 Chinese stocks, that we should be able to see the same mood and feel on the price charts. Okay, so if this is your first time coming to our channel, make sure that you go ahead and subscribe if you do like the particular type of content that we are producing, and as well, if you like the video itself, make sure that you go ahead and like and share the content as well, because we want to make everyone noticeable that you can predict prices before the market actually moves in that direction. So now let's go ahead and look at this article here on the left side of my screen. The title of it reads 3 Chinese stocks to stop worrying about and just buy. That's the question that we are asking you all today. Do you think that JD.com, Alibaba, and Ctrip are buys in this particular market right now, and it's something that you shouldn't have to worry about for the long term? The Chinese economy continues to grow faster than almost any other country in the world. This is how Matt starts off his article, at an annual pace of roughly 6%. The middle class over there in China is expanding by millions each year, so they're turning over into consumers to where they have extra income, to where they can go out and lavishly spend on things that they couldn't afford previously. Consumer related stocks, talking about JD, Alibaba, and Ctrip, have come under pressure over the last year, specifically October, November, December 2018, on fears of a slower economy, the Chinese tariff war going on with the United States, and then you add in issues with the United States and the Chinese trade war. These stocks have fell into a very deep bear territory. Okay, this created a screaming long-term buying opportunities that still exist as of the 22nd of February 2019, from when he wrote this article. So now, as you all can continue to see here, that looking at JD on this monthly price chart, during the month of August, September, October is when the market did see a decrease to the downside in price. So now the first one that he goes on and try to give us a little bit more information about is JD.com. It has had its fair share of issues in the last year, macro events as well as company specific headlines. But even with that negativity, the company still continues to maintain that consolidation around that $22.50 price, and it's still expected to increase its revenue from $53 billion in 2017 to $81 billion for 2019. The e-commerce and online retail infrastructure provider is trading at a price sales ratio of below 1, and it's extremely undervalued at these current prices. It is certainly worth watching as Chinese consumer stocks come back in favor. So is it worth watching or is it worth buying? I mean, Matt, you start off your article with 3 Chinese stocks to stop worrying about and buy, but then for JD.com, you literally come here and say it's worth watching. So, I mean, we need to have some consistency being revealed in these articles that we come across on a daily basis. So just keep that in mind as well. So now the next one on the list is going to be Alibaba. You can see that this is an e-commerce and internet giant. It has ties to nearly every aspect of the Chinese consumer, from an online shopping to banking and lending. And if the middle class for the Chinese industry continues to increase, then obviously you would expect the demand for Alibaba to increase as well. Baba stock has taken a hit with the Chinese market in general, but as things begin to turn around, he expects to see Alibaba as a leader He views the stock as a core holding for any international portfolio. Now, the last one that we're going to look at is Ctrip. Ctrip is kind of like Expedia and Kayak. It's just a Chinese version of it. Ctrip stock has been under pressure due to widespread selling, as well as several analyst downgrades over the past few months. But again, Matt goes on to state that the negative short-term view of Ctrip has created a long-term buying opportunity. The rising middle class in China yearns to travel, and Ctrip would be a direct winner of an increase in both domestic and international travel in the months and years ahead. So those are the three stocks that Matt expects investors to not worry about and just go ahead and buy it for the long term. And now we need to go ahead and transition over to these price charts to see whether or not we are actually getting the same thing. So now we're looking at the monthly chart for JD. And as you can tell, with all that negativity that came into the market during October and November, this particular stock did not fall below the $20 price. And currently on the monthly bars, we are seeing it trade around $27, very positive. And again, another positive thing that you can tell here on the monthly chart for JD is the fact that it has broken above a minor resistance area previously back in 2016 and 17. We are currently closing well off of that right now. So we are in a pretty good up move forming for JD.com right now. We do see a resistance area approaching around $27.50, but as long as the stock doesn't break below $25, I will agree with the article by the price chart that JD.com is still geared for higher prices. $27.50 all the way up to $30 will be the initial price target according to this price chart for JD.com. And again, it has not given us a lot of weakness on the monthly price chart. So when you transition over to the weekly chart, you can still tell that we are coming across resistance. $27.50 is a resistance area. So it is a chance that it can come back down to $25. Okay, so just be prepared for that. If the market in fact gets induced with some weakness and pushes this particular stock back down to lower prices. But overall, for the long-term view, this price chart from a monthly and a weekly standpoint continues to show us that yes, it does has room to grow to the upside. Looking at Alibaba, the last time we did a video for Alibaba was on the 28th of November, and we were expecting this particular stock to continue to move to the upside. And as you can tell, over the last couple of months since we did our video, this stock continues to maintain its aggressiveness to stay above our ascension line. So this stock still maintains its ability to move to the upside. Let's see what it looks like on a weekly chart real quick. And here on the weekly chart, Alibaba last week, as a matter of fact, was able to break above this resistance area that was once acting as support around $170 per share. So the strength definitely is being maintained in the market. It even came and broke above another minor resistance area at 180. So there is a lot of strength being maintained in Alibaba right now. It has broken above $170, $180 per share resistance price. The next one is $190. So this is about $7 away from hitting that resistance area right now. But again, it's a lot of momentum, strength being revealed in Alibaba right now. It does have some legs to grow to the upside as well. $190 will be a first area that I will be expecting Alibaba to try to hit relatively in the near term. But for a long-term move, it is possible for this particular stock to continue to try to break all-time highs in this particular market as well. So I will state that according to the price chart, Alibaba is reflecting strength in the space. I just have identified $190 as a resistance area. Now let's go ahead and look at the last one, which is Ctrip. This is the Chinese version of Kayak and Expedia.com. Now this particular stock is not really reflecting to us a lot of strength like Alibaba and JD.com. That resistance area on the monthly chart is coming in right now as we speak, around $33, $34 to $36 would be a resistance area. And the market hasn't really capitalized on what occurred last month for this stock. So that's another thing that kind of worrisome as to whether or not C-Trip is going to be able to maintain higher prices. Looking here on the weekly chart, you can tell that we are seeing some resistance coming in around $34, which is one of the main reasons why last week we were not able to continue to move to the upside. And I'm not as positive for C-Trip moving to the upside right now. If it does, it would probably just get to that $36 price. But again, this market continues to show us not that much strength, which is one of the main reasons why we need to remain cautious as to how this stock is going to trade. Okay, so I would be expecting C-Trip to maintain some consolidation or trading. I will say that $37.50 will be a resistance area, if not $36, and the support area is going to be all the way down here on our ascension line. So I'm not as too positive in C-Trip being one of these stocks that you shouldn't worry about. Definitely it needs to be one on the radar, because we're not getting as much euphoria of higher prices right now in C-Trip. But again, the market is holding consolidation over the last 3 or 4 weeks, so that is a positive thing to make mention. So I really can't give you from the price point, from the price chart perspective, that C-Trip is really a buy. So my analysis for C-Trip will be for it to hold consolidation in the near term, and we need to make sure that this stock is able to trade above $32.50 in order for us to at least see a higher probability of it moving to the upside. So that is our perspective of what we expect these 3 stocks to do from the price chart. In relation to the article that we just read, 2 of these stocks are literally continuing to show us that they are buys. C-Trip is maintaining this consolidation of trade and needs to be watched a little bit more. So just keep that out as you continue to trade out this week, this year, for these 3 Chinese stocks. So overall, it's iffy as to whether or not these 3 price charts are correlated with the article. For the most part, it is, but there's C-Trip that is really not following that same trajectory. So that is our analysis. Give us your thoughts, give us your opinion on these 3 stocks. Do you think that they will continue to move to all-time highs in 2019? Do you think we should stay away from them? Matt thinks that these are definitely buy opportunities for the long term. We definitely would like to know your opinion as well. So leave us a comment in the comment section of this video. And by the way, make sure y'all maintain your profitability, and go ahead and go to our website, HueFinancial.com, for more information and news about financial information. Make sure y'all maintain your profitability, and I will talk to you all later.